Hello, welcome back, guys. I typically tend to analyze US stocks or maybe ADRs because that's what people ask me to do for the most part. But the tool actually does support international stocks, and I'm trying to make its support better. And I have been working on it lately quite a lot, quite a few hours really. And so you can see here that, for example, I can even try to locate Indian stocks like Adani Ports is one that I have as an example here. As you'll see, this one is an NSE, which is Indian Stock Exchange, and we can try to fetch its data as normal, and you'll see that the whole tool actually adjusts to Indian rupees here, which is very neat and interesting here, and you will see all the metrics here about this company. But also, if you take a look at the stock evaluation tool, you will see that it has also adjusted to Indian rupees. And if we use some projections here that are fairly normal, let's just say 38, 30, 40, and 42. Now, this is not very important because we are not really examining this company. I just want to show you that when we hit calculate here, we're gonna get things back in rupees, and the current price is in rupees again because this is an Indian stock. I think that's very cool. And yeah, I have tried to adjust the stock, the tool basically to adjust to each company based on their currency and does the all the calculations automatically, really. So that's fairly neat. However, the income statement is still in, as you'll see, values are reported in USD. And so while these are reported in USD, all the calculations are happening automatically, and the conversions are also happening in rupees in this case because it's about an Indian stock. And the same thing follows with pretty much every stock. And if we take, for instance, the example of Volkswagen, which is what I'm going to be analyzing in this video, this is going to be XETRA because Volkswagen is trading in the Deutsch stock market. It's a German stock. And we can take a look at the stock analysis chart. You will see that everything again has been adjusted to euros. And so you'll see that all the highs here, all the prices are in euros. And everything reported is in euros. And so let's take a little bit of a closer look at Volkswagen in this video. So the max price, the max chart actually tells us of a company that has achieved some massive highs at some points and then has gone down. It has happened about 3 times here, 1, 2, and 3 times over here through the max period that the company has been running. And so now we're in a little bit of a slump at 195 euros, down about 40% from its last 1-year high. The P ratio of the company, though, is very low, 6.4, and the price to free cash flow ratio is also fairly low, 4.7 here, and it even used to be negative some years ago. So the company is doing better. A little bit of extra dilution, but not much. This is 1%. I'm not too worried about this one. Now, total liabilities to free cash flow, it looks like we have quite a few total liabilities here compared to the free cash flow. So the company could be having quite some debt going on, some liabilities really. And the growth has been increasing, especially free cash flow, as you'll see, from minus 25 to almost 25 here. Actually, a pretty amazing in terms of free cash flow growth. And the debt to equity ratio is still normal, so it looks like the free cash flow may not be too much to actually cover the total liabilities. We'll discover that it looks like the company will be having many total liabilities. And return on equity is normal to 12.9%. And you'll see that the current dividend yield is actually 6.4% with a payout ratio of about 33 and 28 when you compare it to, that is, the net income and the free cash flow. This is more relevant. Regardless, I mean, anything below 50 is very good overall. And we can see the dividends module here pretty much, which is like a breakdown of the dividends that the company is paying. You will see these are like yearly dividends that the company is paying, really, so it's annually. And 7.5 dividend per share is what it is, which is about 3%, almost 4% of its current stock price. Okay, so let's examine the financial statements and actually see the story behind this company from 277 billion. This is a massive company here making massive amounts of money to $284 billion over here. And the net income from 13 billion, almost 14 to 17.5 over here. So it has been increasing. The balance sheet of the company, again, total equity, that has been increasing as well from 131 to 166. Very healthy stuff to see here. But what about the cash flow is very interesting here. You will see that the net cash provided by operating activities is increasing a lot because of the depreciation and amortization. Look at this. This gets added back to the free cash flow, to the cash flow statement, because it's a non-cash expense, and it's like 30 billion every year over here. Very substantial. Now, investing activities are negative because the company is investing in itself, and for the most part, it's capital expenditures and a little bit of acquisition, for example, and some other investing activities, probably in the markets and so. And the net cash provided by financing activities means that the company is actually paying back quite some debt, and you will see debt repayment here has been the gist of it pretty much. Very, very interesting too. The cash also from that the company has been increasing, almost doubling, actually more than doubling since 2017. Love to see that. 44.5 billion is where this company is sitting at right now. And remember, they haven't really issued shares, so that's very interesting. They used to actually lose a lot of free cash flow, a lot of money back a few years ago, and now they're making it on 8.8, 22.9. Amazing, insane increase over here in the last year, really, in terms of the free cash flow. It looks like they are doing better and better in regards to net cash provided by operating activities because of the extra net income for the most part is what actually caused this. Very, very interesting. So let's take a look at the stock evaluation tool and see what kind of price to pay for this one. Again, this is adjusted for euros right now, although these values are actually converted to dollars, but in the very end we're gonna get the value back in euros, so we know what to buy or not. So the revenue growth that we are looking to achieve potentially here, we can see what the company has been doing in the past few years. We have a negative year here, but overall it looks like 3% is about the norm. So I'm going to go 1, 2, and 3 here. And the net income margins tend to be the same every year. So I'm going to go 4, 5, and 6. Free cash flow margins, they used to be negative when the years were negative in terms of free cash flow. Now we're getting to positive territory. I'm going to use something that's pretty modest, 80, 90, and 100. Or normal to modest, and a 13% annual return is what I want to make. And if I hit calculate, now we're getting projection results now that are actually in euros because the whole tool is adjusted to euros, and you will see that the current price is sitting at 191 euros right now, while our low estimates for a 1% even revenue increase point to the company's low price, really, the company's price to pay today of 238 bucks. Which tells me that this company is actually undervalued and it may be a very, very nice purchase right now. And it may have gone under the radar, being a Deutsche company, a German company. Looks like it's a very, very good value right now. And even the medium estimates, 350 bucks, high estimates 400, almost 500 bucks here, with just a 3% revenue growth and a net income margin of 6%, which the company has been achieving last year actually. Very, very interesting. So yeah, I think this company is actually a buy. It looks very interesting, and I wanted to make the video just to show you how you can analyze a European company in this case, and other companies from in the international market. But in this case, we actually analyzed Volkswagen, and it looks like it's a very, very solid buy based on what I'm seeing in terms of its financials. Now, the only thing was the total liabilities of the company, which we haven't really examined. But we can go to the balance sheet here and you will see that the total liabilities are quite a lot, 434 billion here. That is a little bit concerning. The company has a lot of debt, as you'll see here. For instance, like the total debt, they do have a lot of equity too, but they have a lot of debt. So the liabilities of 435 billion here. Remember, if we go back to the cash flow statement, the company just made 23 billion last year. And this is what the tool tells us here, that we would need about what was it like? Let me find it here. About 19 years of what the free cash flow of the company was last year in order to pay back all the total liabilities that the company had. And they do have a lot of equity, and this is why this value is low here and it's still a green. But you have to bear in mind that their free cash flow is almost nothing compared to the total liabilities that they have. They have a lot of liabilities, and that's the only thing that kind of concerns me with this company. It's very leveraged in terms of leveraged in terms of its total liabilities. But other than that, it looks like they may be an interesting opportunity, an interesting purchase here at this current price. They have gone down a lot, and it looks like it could be an interesting buy right here, based on what the discounted cash flow model has been telling us. And you can give yourselves a little bit of a leeway because of this extra debt. And even then, our stock evaluation tool pointed to even our low estimates being very, very much, actually much higher than the current price of the stock. So we are in the green for every category, low, medium, or high. So yeah, this company is probably a buy from me right now. I like what I'm seeing apart from the total abilities, but yeah, I think I could definitely see myself adding a little bit of this one, a little bit of Volkswagen in my stock portfolio. Thank you for watching the video. I hope you enjoyed. I wanted to make a video and actually tell you how to analyze a European, in this case, stock, or another international case, international stock, because I have added a lot of things to the tool and I'm trying to adjust with all, all the stocks, all the markets that the company, that the stock can analyze, the stock tool can analyze. So thanks for watching this one, and I'll see you in the very next one, guys. Thanks again. See you soon. Bye bye.